In today's video, I want to speak about my entire trade process from start to finish. So I've broken down the different elements and I have tapped into doing the full process from start to finish in a previous video. But by me repeating this process, it gives you more examples in the sense of how to apply this on a daily basis. So I have been asked a couple of things in regards to how I approach this. And one of them is, do I do this every day? Regardless if I have the higher time frame marked up, I start fresh every day. So even if a lot of the things on the chart are going to remain the same, I want to refresh my brain in the sense that I can see what I have done. If I have missed anything, it'll also highlight that to me. And it just gives me that ability to refresh everything, start afresh on a daily basis, and see exactly what the market has done from day to day. So, the first thing that I want to make sure that you understand when we go through this is the difference between a break of structure and a change of character, because this is extremely important to understand that if you're not defining these properly, things are going to go wrong for you in terms of your trading. I've seen other traders that define highs and lows as a three candle structure. So a high would be a candle with a lower candle to the left and a lower candle to the right. So, for example, this is what they would define as a high. So it has a candle that is lower to the left and a candle that is lower to the right. So this one is a high. And same with this one here. This is a low. It has a higher candle to the left and a higher candle to the right. This is a low. It has a higher candle to the left and a higher candle to the right. But highs and lows on their own don't really matter to me, because what really matters to me are the highs and lows that did or didn't do their job within the trading range. Now, that might seem, well, what the hell am I talking about here? But I'm going to explain that in this video and show you how I go through this to make it more effective. So let's start off. We'll mark off our current kind of higher time frame range here. We're looking at a daily chart, and I can see here the market came up, made a high. So we'll start from this high here. We had this high that was broken to create a break of structure. So this is on our daily chart. We'll say it's a daily break of structure. So high, came down, failed to make a lower low, and then moved on to make a higher high. So this is our break of structure. So what we would then define it as is this would be a strong low. So I would put my line on that there, and I mark that down as a daily strong low, because this low did its job. So this is the only low that's relevant. This is the lowest point within this range that did its job to create a higher high, and that pushed on then. So then we have our break of a high, we have a pullback, and there isn't really a higher high in that range. So once the high came up, it was closed here. So this is our new high up here. This is the lowest point within that range. So this would have been a strong low, and this was a higher high. So then what happened was price came up. It took out all that liquidity. This was the China tariffs day that Trump announced on a Friday a couple of weeks ago. So that was a black swan day, which took out all of this here and created a change of character. So because we had a break of structure here, let's take these out, and the strong lows were broken. So we'll take this one here. This is a change of character because this was a low that did its job. It made a higher high, and then price came down and aggressively broke and closed below that low. So therefore, this is a change of character. This wouldn't really be a change of character on this time frame, because there was no high on the left hand side here that it broke to create a break of structure. There's no break of structure. This is just an uptrend with a pullback. But this low broke this high. So we have a low, high, and it came back down and made a higher high. It's a bit of a tricky one here on this one, but we'll get a better example in a minute. So then what happened is price came down, created a change of character, took out all this information here. So our expectation was market was changing bearish. But then what happened was this was our strong high up here, because this did its job. It created a change of character. So we would have defined that as a strong daily high, and then this was then violated, and then what is that? A change of character to the upside. So we just have two changes of character in two opposite directions. So I'll draw this across, and we have our daily change of character. So we had a low that made a higher high, came back down. This is our strong daily low. Now this is a massive range here, thousands of points in play on that one, but that's how we have to define it within this range. So this is our current daily trading range. So we have our strong low, daily strong low here, and our daily weak high. So you go, why is this a weak high? Because so far up to this point it has not violated the low that created it. So because this was the high that made this low then violated that high and it came down, this is now protected. So this is our current daily trading range. So that would be my first port of call, is to make sure I'm defining what the highest time frame range is that I would look between. Then I'm going to break it down to try and locate where my current daily range is. So we'll drop it down to 4 hour, and now we'll look at the current trend. So we know that our strong low is down here. We know it's pulled back deep into the range, but up until this point we then need to define what is the market doing on the 4 hour time frame, which is probably the main time frame I would look at. So if we look at the current trading range, let's have a look here. So we'll have a high that wasn't violated. It was touched, but it wasn't violated. That created a low, which was down here. This high then created that change of that break of structure to the downside. So because this high failed to do its job, so it was up here, it came up, failed to make a higher high. Our expectation at this point would have been that it was ran because it was a weak 4 hour low, which it was, came down, made a lower low, and then we need to define the highest point that created that lower low. So we came down, our close was until here, so this is again a little bit of a tricky one. But in this case, because this is the high, that was the catalyst for this break all the way down, I would mark this off as my 4 hour strong high, because this did its job all the way down. So our expectation on a 4 hour time frame right now is, even though it's uptrending, we're uptrending in a pullback. That we have the expectation that until this strong high is broken and closed, we are in a downtrend. So we would then want to locate areas within this level that are going to give us shorts. So we just want to predefine this low here has so far failed to do its job. So we're going to define this as a weak low, and until this high is broken, our expectation is short. Now price can definitely run through this and push for a higher high, because on the daily time frame we are currently in an uptrend, but in our current trading range we can't really say what's going to happen yet. There is space to pull back. Will it go for the weak low? I don't know at this moment. So what we need to do then is start running down our trading range. So we have our trading range defined. Next I'm going to break it down into the next level, so the 1 hour, to see what we're actually doing here. So you can see here we've came down, made a low, failed to make a higher high, and then the lower low was created across here. So another key rule that I have is the definition of a break or a run on a high and a low. So as this price came down, it failed to make a higher high. So we knew that the low that failed to make the higher high was weak, which was this low here. This was the lowest point that made this high, and eventually it was ran. So say again with my wicks here, say if I just took this and I went, that's wicking, I'm going to go short here, I was probably going to get taken out at least this high. So you can see this high was the strong high. The change of character didn't actually happen, so there was no trade within this level until the break came here. So what I could have done in that sense is, as soon as price closed below that low, I could have went short to target a 2 to 1, for example, or whatever it was. It was 2.6 to 1. I didn't know where the bottom was, but just as a quick example of what I mean by the breaks and the wicks on your candles. So a lot of people would have got short here. They would have got probably stopped out if this high was their stop loss, which it would have been for a lot of people, and then price ran down lower. So once we then have our change of character, so we have a low that was a 1 hour break of structure, and then we have our high that created that break of structure, which was this one here. So now we have a 1 hour chalk, because this was the highest point that created this low. We've had a chalk to the upside. Now we need to define where we're going to go with this. So if this is the weak low and that remains in place, our expectation is that price will go down to this level from somewhere up here. Even though we've had a 1 hour chalk, the higher time frame is king, and that is going to give us our directional bias until it tells us otherwise. So we're going to look for levels that will give us that information. So we have a thing called a fair value gap. If you've studied ICT, it's a gap in price between different levels. So they're constantly occurring, but some are more relevant than others. So for example here, from the top down, a fair value gap is a 3 candle pattern. So it's the first candle then leads to the second candle and the third, which has a gap in price between it. So price didn't retrace into that gap. So you can see here between this candle, actually let me zoom in so I'll make this a little bit clearer. We have first candle, then price ran down aggressively, and price failed to come back up and close price between this candle and this candle. So there's a fair value gap of space in price between them. So if I drag this across, we can see price then eventually came up to this level here. So we had that gap in price within there. Then because this price then ran down, we have a lot of free space in between these levels. So I can then look to see, is there an area of interest within this zone? So we have an order block here. So an order block from a bearish perspective would be the lowest bullish candle for a downtrend. So if price was running up and then price went to a downtrend through it, I'm going to find the lowest bullish candle. So that can be the start of my order block just here. But I'm also very aware of the gap in price. So it doesn't necessarily, I'm not saying price has to turn here. It's just the first area of interest that I'm going to look to see if there is a reaction from that. So I can set an alert on this level. But I'm also, and I can mark this off as an order block, but then I'm also very aware that price in here is a giant fair value gap. So could price bounce from here? Absolutely it could, but it hasn't given me a signal yet on the 1 hour, so I don't have a trade just at that point. But it could also fill in the entire block of price up here. So what I could also do is set an alert at this level and say when price reaches that, then I want to start looking for shorts. But at the moment we're currently in an uptrend, because on the 1 hour, again if I just break it down, just within the current range that we're in for a bullish range, we have a 1 hour break of structure here, and we have a 1 hour strong low, because this did its job. This is the lowest point that created the break of structure to the upside. There is no chalk at this level yet. So our internal bias is that that price is continuing higher. So we had a fair value gap here. There's still a little bit of space left in it. So you can see if I drag it down, so you're talking between this candle and this candle. Price has tapped into it, but it hasn't rocketed out so aggressively yet. So price may want to come down and completely fill this in. Definitely going to be aware of that. Price did it? No, it didn't tap onto the order block. So for a bullish, it's the last bearish that created that up. So I want to be aware of all these levels, that if I'm looking for a long, again, what I'm going to do is set an alert on that level to say, okay, price might come back down to that, and then I can drop down to a lower time frame to see what's actually going to happen in there. So 15 minute then applies again. Let's have a look at our current 1 hour range. So we have a 1 hour strong low because it did its job, and we have a 1 hour weak high because it failed so far to create a lower low. So again, you can see there's a bit of a consolidation happening here. It's Monday, it's the afternoon on the UK session. People aren't really going to be aggressively trading at this time, so that's why it's consolidating on this block. So I don't have a trade. If price comes down to here and then gives me a change of character to the upside, I will take the long with my 1 hour strong high being my stop loss level. The market's going to tell me if that's what it's going to do, because the market repeats over and over again. So as an example, I'm going to see if I can find something that could be a trade here just to show you. Yeah, for example, so this is a trade I took last week. Price came up. You can see, like I spoke about earlier on, we're looking at the order block. So this was an order block going down into this level. I wanted to see price react off this low, so this resistance level here at the top. So what happened was, in this case, I'm going to actually remove these drawings here and just pop them back in so we can locate this a little bit easier on the 1 minute chart. So we had a high. There was a 15-minute change of character here. And the reason is because if I look in very deep, this made a higher high. Now I know price didn't close, so that was actually quite good for me to see, because if price doesn't close on the higher high, then we know the low was ran. The low was ran aggressively down, and it left a lot of space here. So we had a fair value gap overlapping. So you can see there's a fair value gap here overlapping with this resistance low. So that was a nice draw on liquidity for me. And I had an alert set in here that if price comes back into this level, I then want to see if it gives us an entry signal. And my entry signals are on the 1 minute chart. So I drop down to the 1 minute level. I'm going to locate this here. So we have our block, and we'll go over. So we had our price. This is the level I've just marked up on the 15-minute chart. And if I scroll over to the right here, you can see price crept up slowly into that level. And I got an alert on my phone to say price is now tapped into that block that you're interested in. So what I then did was I marked out on a 1 minute where our break of structure and our chalk is within this zone to see if price is going to continue to push higher or if price is going to be protected on that level. So I can see here that price then, same thing as what I just showed you but on a lower time frame, it created a break of structure, and a very weak break of structure, what I would call a failed break of structure, because although it made a higher high, it didn't close. So that's extremely weak to me. And again, it's like I spoke about earlier on with the candles. The wicks are weakness, candle closes are strength. So it showed me weakness here, but I wasn't just going to enter because 1 or 2 wicks doesn't mean price won't then break up and close above. I wanted to see a break and close of something. So after I seen this failed break of structure, I tried to define the low that created that failed break of structure, and that low was here. So this is the lowest point that created that failed break of structure. And I dragged my line over and I said, once I get a candle close below this low, I'm going to short. So I entered in my short just here. As soon as this candle closed, so it was waiting, I don't know, 3 or 4 minutes for that to happen, I put my stop above the high. Let me just fix this up so you guys can see this properly. My stop was above that high, and on the 4-hour chart, what I did was I looked for my weak low. So because this low here that we defined earlier on, that was our 4-hour break of structure down, because this failed to create a higher high, so low came down, failed to make a higher high, came down here, failed to make a higher high again, we got our entry signal from that section. I entered my short off that 1 minute change of character and dragged it down to this low as my target for a 32 to 1. So you can see really what I'm doing is I'm trying to identify those high probability areas that are in these levels, and within then I am then trying to locate where's the market's probability of running to, where are the lows or the highs that fail to do their jobs on a higher time frame. And that was an excellent execution of that. It just brought me straight down. There was very little pullback in there. Um, Minor pullback here and then straight down pretty much to the bottom. So what do I do when I'm actually in a trade to make sure that I'm happy to hold it? So this was a 1 minute entry. Let me go back to where that entry was. And I'm going to use the same rules that I apply over and over again to manage that trade. So we know we entered here. I'm just going to remove that kind of entry signal on that one. And I use the 1 minute and the 5 minute to measure how I'm going to hold this trade. So I want to see breaks of structure and not see changes of character the whole way down. So that's giving me confidence that the market is continuing in the direction. I'm not looking at trend lines because trend lines get messed up and tricky all the time and pullbacks happen. So what I was doing was I was looking at, right, this high created the low. As soon as that low was broken and closed, I had my stop down at pretty much close to break even. So this, I'm gonna create a red line here, and I'm just gonna make this my stop loss, just so you can see how I manage the trade there. So we'll say that was red, and this would represent where I was moving my stop loss to. So price came down, made a low, failed to make a higher high, and then broke that for another break of structure on the 1 minute. So you can see we have a 1 minute break of structure. I moved my stop down to the high that created that break of structure. We pulled down, fell to make a higher high, and you can see there's a break of structure with a candle close right there. So we have a 1 minute break of structure. My stop loss then goes below the low. I'm also looking back on the 5 minutes. So again, this is going to keep pulling back, but you can see it's not doing any kind of pullback here on the 5 minutes. So I'm fairly confident, especially if it runs through all these lows here, that I could keep my stop here momentarily for a while and let it run a little bit. So that's what I would do, but I'd be very aware of the 1 minute chocks, 1 minute breaks of structure as I go down. Where's this gone? So yeah, sorry, just to pull that back, I'll try not to do that again. And to show you again the measurements, we have a massive drop down. There's a low here, it doesn't make a higher high, drops down, makes a low. So my stop loss is still in place. Where's our break of structure? We have a candle close, and then I'd be happy to move my stop loss down to here, because this is the highest point that created the break of structure. We have a low, fails to make a higher high, creates a break of structure here, and then I can move that down. Same thing, we make a low, fails to make a higher high, makes a lower low. So this one slightly tricky, because it does give us a change of character, but my stop would probably still remain up here. I think that's what I did. I was happy to let it remain, because the market had pushed so aggressively that I wanted to give it a bit of space for a minor pullback. And this close, although it closed, it wasn't very strong to show me that it was going to really push up. It also didn't really break above this one. So you can see that, like, I was using two levels that it did wick it, but because it didn't close above, I was going, yeah, maybe if it closes above this high, I'll take it, but it didn't. So I was happy to keep my stop loss there. Sometimes, again, it's just to generate liquidity in there. It's just to trick people in. So once then I was watching it, it then aggressively moved back in the direction I was looking for. I was confident in my 4 hour week low as well, because it really didn't do its job in that case. And you can see through back testing and forward testing that weak highs and lows, especially in the higher time frame, tend to get ran. So what I can say then is we had a 1 minute break of structure to the downside, and it ran. So I was then able to move confidently my stop loss to this high. We had a low, fell to make a higher high, came off the rejection right there. So this is a little resistance level, created a new break of structure to the downside, and we were getting tight to the low here, so I was moving it, and then we were pretty much straight all the way down. There was a low, high, failed to make a lower low, fell to make a higher high. This was my high still in place because nothing else was happening here. Again, the job of a high is to make a new low with a break of structure. So because this one was the only high in this entire range, I had to keep my stop loss here. So even though there was a pullback that lasted 15-20 minutes, I have to stick to my rules. So I had to keep that level there. This is nothing. So just to highlight this made a low. This failed to make a higher high. This high failed to make a lower low. This low made a slightly higher high than this one, but this high hasn't done anything, so it's completely irrelevant. And then this high made a lower low but failed to close. So I knew this was going to be broken as well because this failed to do its job. But this again is nothing really because it hasn't closed below this low, so it's not strong. So again, it could be ran, but I want to keep my stop loss below the high that's actually doing its job in this case. And then eventually the low that this high makes is broken and closed. And then I'm happy to move my stop loss down to the high that created that break of structure. So that's a 1 minute break of structure within, not a 1 hour, 1 minute break of structure within that level. And then you can see price comes down, makes a high, makes a lower low, fails to make a higher high. A lot of what people would consider consolidation, but you can see here because this high did its job, I can pop it there. Price comes up to it, fails to make makes a lower low, fails to make a higher high, and then eventually it makes the lower low and takes me out for my take profit level, which is just down here on this line. So you can see the market repeats the same process over and over again. And if you're reading the market, you need to ensure that you're able to define those breaks of structure and changes of character, and also define your current trading range. It would be ignorant of me to just have shorted this and kept going, to think that it was, unless I was following my rules. So again, eventually it came up here to turn it around. I was happy to take my take profit because I know once it takes that, there's probably going to be a bit of a stronger pullback involved, which there was, but I think it continued lower after that eventually. Doesn't really matter to me. I was out at a 32 to 1. 32 to 1 is a bloody good day if you ask me, so I wouldn't be complaining about that. So that's kind of the process that you want to follow. And it's the same thing if you look on any chart. This works on absolutely everything across the board. If you look at that and keep repeating it over and over again and training your eye to see, did a high do its job and break the low that created the high, and vice versa on those lows, you're going to see so much more evidence in favor of your trades and locating the areas, even just for an entry signal. You can manage it in that sense and put the probabilities in your favor. So again, look for the higher time frame, higher time frame trend that you're trying to aim for. If you can define that and then find the levels of which it turned, locate your lower time frame changes of character from those levels, and use your break of structure to manage your trade as you go down. I promise you, your trading is going to become a whole hell of a lot better. You're going to see so much progress and so much more confidence in your ability to not only enter trades, pick good trades, but also hold trades to where they need to go to. So as always, I hope that makes sense. If you do have any questions, feel free to drop me a comment. I have a free Discord there where I teach this. I do ask that if you join the Discord that you're serious and that you want to learn. I don't allow people to remain in my Discord if they're not putting the effort in to share their progress, share their charts, and learn as a group together. It is free. I'm doing it for free. Why am I doing it for free? Is because I started off, I was scammed for a couple of years at the start, being led down incorrect paths, making mistakes, and losing a whole hell of a lot of confidence in my own ability to do this because I was giving bad information about how to trade, and it was just from guys that talked a big game. So I would rather that not happen to you. I would rather you have the ability to avoid all the YouTube and Instagram traders that don't really know what they're talking about. They tend to jump from system to system. My system speaks for itself. You can repeat this over and over and over again. All it needs is a little bit of practice and a little bit of patience, and you can make this a success without having to pay ridiculous amounts of money for signal rooms and stupid courses that are not going to teach you anything that you can't get for free online anyways. So I hope you like this video. Please like and subscribe, and any questions at all, like I said, just send them on, join my Discord, and I'll speak to you soon.